Trump, meme coins and Bitcoin ETF boom. How 2025 is reshaping the crypto power game. Welcome back to AI Finance Mastermind, your trusted source for crypto intelligence, AI-driven financial strategy, and breaking global trends. Today, we analyze the forces reshaping the crypto world in Q1 2025. Bitcoin has surpassed $93,000, fueled by record ETF inflows approaching $1 billion in a single day. Meme coins linked to Donald Trump are exploding in value, and industry giants like Tether, SoftBank, and Cantor Fitzgerald are launching a multi-billion-dollar venture to reshape crypto's institutional backbone. What does all this mean for you, your portfolio, and the future of crypto? Let's begin with the Bitcoin ETF boom. As inflation concerns rise and gold stalls, Bitcoin has reclaimed the spotlight. On Tuesday alone, investors funneled nearly $1 billion into US-based ETFs, marking the largest single-day inflow since January. Institutional confidence is back, and Bitcoin is no longer viewed as speculative. It's becoming an anchor. ETF inflows are not just capital movements. They are power shifts. Wall Street isn't fighting crypto anymore. It's integrating it. Firms like BlackRock, Fidelity, and ARK Invest are paving the way for mainstream adoption, changing the dynamics of retail and institutional crypto participation. Next, let's talk politics. Donald Trump has thrown fuel on the fire with his Trump and MELANIA meme coins. These aren't just speculative tokens. They're tools of influence. Trump has invited the top 220 holders of the Trump token to a private gala dinner at his Washington, D.C. golf club. For the first time, we're seeing blockchain used not just as a financial layer, but as a political engagement layer. The implications are deep. Imagine a future where campaign donations, voter incentives, and political loyalty are managed through smart contracts and tokenized systems. This is not a meme anymore. It's a model in development. While meme coins dominate headlines, the real structural change is happening quietly. Tether, SoftBank, Cantor Fitzgerald, and Strike have joined forces to create 21 Capital, a $3.6 billion Bitcoin strategy that will go public via SPAC. With one move, they will control the third-largest BTC treasury among public entities. 21 Capital is not just a fund. It's a strategic reserve. It aligns with Trump's promise to make the United States the crypto capital of the world. As China pushes its digital yuan and Europe tightens stablecoin regulations, this is America's countermove. Monetary sovereignty, now reinforced with blockchain. But with all this innovation, risks are rising too. According to the FBI, Americans over 60 lost nearly $3 billion to crypto scams in 2024. Fake platforms, deepfake influencers, and AI-generated scams are targeting the vulnerable. Many of these schemes promise high returns, fake celebrity endorsements, and instant profits. To protect yourself, always verify tokens and smart contracts. Use tools like Chainalysis, Solidus, and Certic to scan wallets and transactions. And never invest in platforms that guarantee returns. In crypto, nothing is guaranteed. Now let's turn to Bitcoin dominance. BTC currently holds 61.3% of the total crypto market cap. When this number drops below 58%, altcoin season often begins. Historically, these drops precede explosive gains in Ethereum, Solana, Cardano, and meme coins like Floki and Pepe. Solana is already climbing. Pepe has risen 23% this week. Floki is up over 30%. Smart traders are watching BTC dominance closely and rotating into high-potential altcoins with strong community momentum. If you're planning for Q2, this is the time to position. Track market signals. Set alerts for key dominance thresholds. And be ready to act when the tide turns. In summary, Bitcoin is not just rising. It's institutionalized. Trump is not just campaigning. He's tokenizing. SoftBank and Tether are not just investing. They're building financial infrastructure. And scammers are not slowing down. They're evolving. The power game in crypto 2025 is no longer only about market cap. It's about narrative control, access to liquidity, and real-world influence. If you're not paying attention, you're falling behind. Subscribe to AI Finance Mastermind to stay ahead. Like the video. Share your thoughts in the comments. And prepare for what's coming next. This content is for informational and educational purposes only. It does not constitute financial advice. Always do your own research and consult with a licensed financial advisor before making investment decisions. Bitcoin's 2025 rise isn't just driven by hype or technical upgrades, it's about global financial uncertainty. As central banks continue to navigate inflation and geopolitical tension, investors are rediscovering Bitcoin's value proposition as digital gold. Unlike fiat currencies that can be printed endlessly, Bitcoin's supply is capped at 21 million coins. This makes it a hedge against currency debasement and an increasingly attractive asset in inflationary environments. In fact, some economists now argue that Bitcoin's fixed issuance schedule makes it more predictable than gold in long-term portfolio modeling. Institutional interest has followed this narrative. Hedge funds are diversifying their portfolios with Bitcoin to reduce exposure to traditional equities and fiat currencies. Pension funds in Canada and sovereign wealth funds in the Middle East have disclosed increasing allocations to crypto, not for quick profits, but for strategic reserve purposes. And as we approach Bitcoin's next halving, scarcity will become a more prominent narrative once again. With fewer new coins entering circulation, supply-demand dynamics are expected to intensify, potentially driving prices even higher. In this new cycle, Bitcoin isn't speculative, it's structural. AI has revolutionized how we manage portfolios, analyze charts, and automate trades. But it has also transformed how scams are executed. Deepfake influencers now promote fake tokens. Chatbots impersonate well-known investors. And entire DeFi platforms are built with malicious AI-written code. In 2024 alone, scams powered by AI led to nearly $3 billion in losses for seniors in the United States. And that's just the reported cases. One popular scam format uses cloned voices and images of influencers or CEOs to pitch fraudulent investment opportunities. Victims believe they're investing in the next big thing, until their funds disappear. Another growing threat is the use of AI to bypass Know Your Customer protocols. Fraudsters use synthetic identities and fake documentation generated by AI to gain access to exchanges and DeFi apps. Protecting yourself in this new environment means thinking like a hacker. Verify before you trust. Use multi-factor authentication. Keep most assets in cold wallets. And stay informed with real-time scam databases like Scam Sniffer or RugDoc. Crypto innovation is powerful, but it must be paired with caution. As crypto matures, a striking generational divide has emerged. Gen Z and millennials are driving DeFi adoption and community projects. Boomers, on the other hand, remain skeptical, unless guided by institutions or advisors. Younger investors value decentralization, privacy, and tokenized ownership. They're comfortable using non-custodial wallets, trading NFTs, and engaging in DAOs. For them, crypto is more than an asset, it's a culture. Older generations, particularly those nearing retirement, prefer clarity, simplicity, and regulatory security. That's why Bitcoin ETFs have such strong appeal. They represent crypto exposure in a familiar, regulated wrapper. This divide creates tension in education, marketing, and regulation. Crypto companies must now design interfaces and campaigns that cater to two radically different mindsets. Meanwhile, financial advisors are racing to understand these new products to better serve multi-generational wealth clients. Bridging the generational gap will be crucial for mainstream adoption in the years ahead. Bitcoin dominance is one of the most useful indicators in the crypto world. It shows the percentage of the total market capitalization held by Bitcoin compared to all other cryptocurrencies. Historically, when BTC dominance is high, it reflects investor caution, with capital flowing into the perceived safest digital asset. But when dominance declines, that capital often shifts to altcoins, launching what we call alt season. The 2021 cycle saw BTC dominance fall from over 70% to under 40% in just 6 months, sparking massive rallies in Ethereum, Solana, Cardano, and meme coins like Shiba Inu. Now in 2025, with BTC dominance hovering above 60%, analysts are watching closely for a break below the 58% level. If that occurs, it could signal a rotation into high beta altcoins and new layer 1 protocols. But not all altcoins perform equally. Those with real use cases, developer traction, and strong community support tend to outperform. Solana, for example, has rebounded sharply from previous lows, powered by faster adoption in DeFi and NFT gaming. Other contenders include Avalanche, Near Protocol, and even some new AI-integrated tokens. Investors should watch for catalysts such as new exchange listings, protocol upgrades, and venture capital funding rounds. These often precede strong altcoin rallies. Meme coins have evolved far beyond their joke origins. In 2021, Dogecoin and Shiba Inu shocked traditional analysts with billion-dollar valuations. By 2025, new contenders like Floki, Pepe, and Trump tokens have taken their place, not just as speculative assets, but as cultural movements. At their core, meme coins thrive on attention. Their value is derived not from utility, but from viral momentum, celebrity endorsements, and community memes. This makes them unpredictable, but also incredibly powerful. The Trump token surge is a perfect example. Its value was boosted not by utility, but by a strategic gala announcement. The idea that top holders could dine with a former president turned the token into a social badge, a VIP pass, and a political statement all at once. Some meme coins now even function like loyalty programs. Holders gain access to merch, online communities, events, and even staking rewards. While critics call this unsustainable, others see it as a new form of Web3 branding. The key is to recognize the difference between a meme trend and a meme trap. Projects with transparency, engaged communities, and real-time governance have staying power. Others fade as quickly as they rise. Regulation is the defining force behind crypto's next evolution. In the United States, lawmakers are caught between supporting innovation and enforcing investor protections. While the SEC remains aggressive toward certain tokens and exchanges, Congress is debating stablecoin frameworks and crypto tax reporting laws. Meanwhile, China has doubled down on its digital yuan experiment. While crypto trading remains banned, the Chinese central bank is piloting cross-border CBDC settlements with Russia and the UAE, bypassing traditional SWIFT systems. This presents both a geopolitical challenge and a model of centralized digital control. The European Union is ahead in crafting comprehensive crypto regulation. The Markets in Crypto Assets Regulation, MiCA, establishes clear rules for stablecoins, exchanges, and asset-backed tokens. It also includes provisions for environmental disclosures, a nod to growing ESG concerns. This regulatory divergence means global crypto businesses must now choose their base of operations strategically. Will they operate in freedom-first jurisdictions like Dubai and Singapore? Or conform to the strict frameworks of Brussels and Washington? In 2025, the regulatory map is as important as the technology itself. AI is now integral to modern portfolio management in the crypto world. Tools like Token Metrics, Numerai, and Masari offer AI-curated investment strategies, sentiment analysis, and real-time market predictions. These tools don't just chart trends. They learn from them. Using large datasets and machine learning models, they can anticipate market shifts before they happen, scanning everything from Twitter mentions and Discord traffic to blockchain wallet activity. Portfolio managers use AI to automate position sizing, rebalance allocations, and execute trades based on predefined risk parameters. Retail investors can access these same tools through apps that offer real-time trading signals, AI-powered alerts, and personalized risk scores. The rise of AI also means crypto markets are now faster and more competitive than ever. Those who use automation have an edge. Those who don't risk being left behind. But AI is not infallible. Markets are still subject to human emotion, macroeconomic shifts, and unpredictable black swan events. The best results come from combining AI with human intuition and macro-level understanding. Tokenized politics may sound futuristic, but it's already here. The Trump token dinner is only the beginning. Political DAOs, decentralized autonomous organizations, are forming to fund candidates, shape policy, and create digital voting mechanisms. These structures allow communities to pool funds, vote transparently on spending, and hold public figures accountable. Imagine a future where citizens use blockchain to propose legislation, fund public projects, and reward civic engagement with governance tokens. This could decentralize not just finance, but democracy itself. Already, smaller municipalities in Latin America and Asia are experimenting with blockchain-based ID systems, public budgeting, and local DAO governance. The movement is young, but the potential is enormous. The risks? Manipulation, lack of legal precedent, and data privacy issues. But if designed well, tokenized governance could be more transparent, efficient, and participatory than the political machines of the 20th century. Crypto is no longer just an economic revolution. It is becoming a political one. At the start, crypto was about freedom from central control. Bitcoin was born in the shadow of the 2008 financial crisis. Ethereum promised programmable finance. DeFi unlocked open markets. NFTs brought digital ownership. But by 2025, we're at a crossroads. Institutions, governments, billionaires, and global banks are now active participants in the space. The question is no longer if crypto will survive. It's asterisk who controls it. Will the future of crypto be shaped by decentralized communities or regulated platforms? Will it empower individuals or replicate the power structures it aimed to dismantle? This moment is critical. Every investment, every regulation, every innovation contributes to the direction we take. The choices made now, by developers, investors, voters, and governments, will determine whether crypto becomes a tool for liberation or another layer of control. The technology is neutral. The future is not. Choose wisely. If you found this video insightful, subscribe to AI Finance Mastermind for weekly reports, tutorials, and deep dive investigations into AI, crypto, and the future of finance. Like the video. Share it with a friend. And comment below. What do you think is the most important trend in crypto this year? This content is for informational and educational purposes only. It does not constitute financial advice. Always consult with a licensed financial advisor before making investment decisions. Cryptocurrency trading involves significant risk, and past performance does not guarantee future results. Invest wisely, stay informed, and remain curious.